More now on the financial troubles in Cyprus, where the government is trying to come up with a plan to reorganize its banks by Monday. That's the deadline set by the European Union officials. If they don't, it could mean collapse of the entire banking sector. As Michelle Caruso-Cabrera tells us, that fear is being felt on the streets.
Cyprus, yet another country in Europe where the devastation from the financial crisis is being felt throughout the population. Throughout Cyprus, lines could be seen all day long at the ATMs of the country's weakest bank, Laiki. The bank's customers desperate to take out cash because of rumors the bank was on the verge of failure.
This is not solidarity. We are being treated like third-class citizens, and we are very, very angry.
How much money did you take out?
I just took 1,000. I've been taking 1,000 every day. And personally, I'm taking this money in cash with me to the UK tonight.
Because?
Because we don't know what the future of our country holds.
The reason they're using the ATM? The banks have been closed nearly a week and won't open until Tuesday, earliest. Business owners deeply affected by the bank closures. The head of this fruit import business is worried about making payroll.
We are doing our best to expedite the cash collecting process in order to be able to pay our employees next week. Most shipping lines require that you pay in cash. So if you want to get some important goods out of the port, you have to pay in cash.
Bank employees likely to be on the losing end as well, and they know it, showing up in front of Parliament to protest in fear that their bank will be shut down.
Lies, totally. It's not a family, EU. It's Germany and other countries. They are not our friends because the members of family don't do this.
Many people here are so angry. They feel they have been treated unfairly by the Europeans, particularly the Germans, and they're deeply angry with the politicians who they say have led them astray. For Nightly Business Report, I'm Michelle Caruso-Cabrera, Cyprus.
Our market guest tonight says investors should be concerned about what's going on in Cyprus and its impact on Europe. He's Andres Garcia-Amaya, global market strategist at JPMorgan Funds. You know, Andres, tell us why U.S. investors should be concerned about what's going on in Cyprus. A lot of them think that there's no spillover effect over here.
Right. I think it's really important to look at Cyprus and not blow it out of proportion, but at the same time don't underestimate its risk. And its risk is that it does create question marks around the safety of deposits around the European Union. The whole point of creating a banking union is that a Cyprus bank is as safe as a German bank, and this does create a question mark.
Andres, is Europe for investors just simply too hot to touch right now?
I think if you look at individual companies, if you look at their balance sheets and you try to understand what is their drivers of growth, there are still opportunities, especially large corporations that have access to the emerging markets, and that's really where their growth is coming from. But overall, at the macro level, I do expect some headline risk this year. Let's not forget, this is a German election year, right? In September, Merkel has to convince her voters that she should be reelected, and I wouldn't put that past what's happening in Cyprus and what other headlines could come up during the duration of this year.
Let's talk a little bit about things closer to home. Earnings, you heard in Tyler's report that we've had some disappointing earnings recently. You know, we're going to get a lot of reports over the next couple of weeks. Are they going to shape the direction of the markets?
Well, first off, we had a weak market today, and I think it's important to take it in stride. We've had a great run, but it is concerning when the markets move up in a straight line, up or down. So some consolidation is actually healthy. Two, when it comes to earnings, we do expect earnings not to be too strong in the second quarter. Let's remember what just happened, right? We had the payroll tax cut going away. We had the sequester that's really going to start hitting in April, therefore the second quarter. So earnings in the short term might seem weak, but we do believe over the next couple of years, the earnings story could be pretty strong, especially when you look at the economy and the fundamental story, what's happening with housing, and slowly what's happening to jobs.
So where should I put my money, Andres? If I want to be a broadly diversified global investor, what percentage of it right now, of my equity holdings, should be in the U.S. market, and what percentage in foreign markets, what percentage in emerging markets?
So first off, we are overweight in the U.S. equity markets over, for instance, other developed economies like Europe. I think a lot of the headline risk is going to actually send a lot of dollars back into the United States. And fundamentally, the U.S. economic story is improving. But just a comment on emerging markets, because you hit on something that I think is important. I think most investors globally are structurally underweight emerging markets. They might hold maybe 4 or 5% of emerging markets throughout the whole portfolio. Yet, if you look at the share out of whole world's market cap for emerging markets, it's 13%. So I do believe that people structurally are underweight and they need a little bit more exposure to emerging markets, which right now seem there's a lot of volatility there, but I think there's also a lot of upside.
Andres, you used to always hear buy on the dips. I don't know if this is one of those times. Should people start picking up some stocks if they haven't been involved in this market rally, or is a serious pullback close by?
I think you have to look at your options, right? So if you have a new dollar, what are you going to do with it? Are you going to put it in fixed income? Are you going to put it on cash or in equities? I think even at these levels, equities still look more appealing than the other options. So if you see some weakness, I would actually put that new dollar into equities. Why? Because everything else just looks so expensive.
All right, lots of good information. Thank you so much, Andres. Andres Garcia-Amaya, Global Market Strategist at JPMorgan Funds.